Hi guys, Jared here with Day Traders FX. I hope you all had a very great holiday break and have had a happy new year, and I am glad to be back in the markets. I took about 10 days off and it was fantastic and it flew by too quickly. So I hope you guys all had a great break. I sure did, but I'm glad to be back to the markets. So let's get down to the markets. We've seen quite an interesting day today. Gold has rallied a bit, oil's rallied. Dow and S&P, look at the S&P, 36 points up. And the Dow is up 309 points to close the day. Wow, that's pretty fantastic. So pretty good day. Obviously, the markets are rallying on the fiscal cliff deal, and there's a lot of details about that. So if you just read around some of these financial sites, you're going to hear a ton about it. I don't think the craziness is over personally, but I think for now, markets are obviously excited about that. So let's play this rally as much as we can. Having a quick look at what we have for the rest of this week, we saw that today we had a little bit of a better than expected, better than expected number for the manufacturing PMI, the ISM. And so remember, we have that because this week is actually the week of non-farm payrolls. So we don't have any significant announcements the rest of the day today. It's a bank holiday in Japan, China, so things should be pretty quiet. Coming into tomorrow, we have the ADP, which is always a bit of a mover. That's exciting. We have unemployment claims out of the U.S. We have the FOMC meeting minutes. So Thursday is going to be a big day, not to be outshined by Friday, which has non-farm payroll for the U.S. and employment numbers for Canada and the ISM for the U.S. So we're going to see a pretty big day on Friday as well. So just be ready for that. We have a lot of big things happening, a lot of stuff in the works. So here's the euro dollar. Euro dollar is looking interesting, as you can see on this hourly chart here. The last several days have been very up and very down and very up and very down. And we've got kind of this channel of about 150 pip channel or so. It's kind of this 131.55 area and 13300. So we're just right about 150 pips. You can see that channel right there, 13300, 155, 131.50, 55, right in that area. So the euro dollar looked very nice coming up here, but we did end up with a nice double top. So we had a nice big double top here. Then we had a nice big fat reversal candle on this 4-hour chart, and the euro dollar came plummeting down. Well, now it's come down to this main support. If you guys have heard me talk about this before, 131.50 is this ridiculous level in the euro that gets hit constantly. And so here we are back to 131.50, which is a very common level. And it's also turning out to be some pretty strong support. Now, the question is, do we buy off this level? Do we watch for a break? What do we do? At this point, I kind of like a buy off this level because even though we had a nice big reversal candle right here, that could have very likely played out already. Ran about 100 pips and a pretty nice little move there. If we look at the daily chart, things are looking interesting on the daily chart. It looks like, just as we've seen here, there's a ton of support at 131.50. So there's tons of support there. But there's also possibilities of breaks just slightly lower into, if we look at the weekly chart, into this descending trend line that the euro has recently broken out of. So we could very likely be coming back into some kind of overlapping support down here with some of these trend lines and start, kind of start heading into that area. So we've got to watch for that. If we zoom in just a little bit, we can see that the euro basically bounced off the 200-day moving average from the weekly chart, and that's kind of where we've started to get a lot of push there. And one thing, if we look at this real quick, I'm just going to get these numbers out of the way for one moment so we can see this just a little bit better on the weekly. But you can see right here that we've got a pretty decent little reversal candle here as well. This looks like it could turn out to be a shooting star. It's about the same height as this long wick candle right here. So there's good resistance up there at 133.00. So once again, to reiterate the fact that I do like buying off some of these lows, I think there's a decent chance that we could get a break of 133.00 and get ourselves down into that 130.50 and kind of even potentially beyond right here. So we see the 200-day moving average on the 4-hour charts right around 130.60, and so we could potentially be headed into that. But let's watch this 131.50 area. If we can stay above this, then I like buying off this. I want to see a little more price action, but I like buying off this. If we can get some consolidation and a few more candles telling us that there's some positive reaction off this support, then let's look at buying off 131.50 as close to that level as possible. Otherwise, we're going to be watching for a break, and we'll see if we can trade this down another 100 pips, which I think it could very likely go. So that's what we're going to keep an eye on there. It's a pretty long explanation for that, but that's what we're looking for. Pound dollar, we still have a pretty big gap here. It's about a 50 pip gap on this pound dollar, if I'm not mistaken, 52 pips or so. Pretty big gap. pretty big craziness here. Nice shooting star on this 4-hour chart, just really kind of coming down. It's all over the place. You know, we're kind of wiggling out of these holiday markets. You can see on this daily chart here that this could turn out to be, that's a crazy long wick, and that could turn out to be a negative candle. It probably won't, but it still could turn out to be, and that would be a very nice reversal type pattern that we'd be looking for. Big resistance here, big double top, big attempt at breaking 16300, unable to, coming back down, probably going to fill this gap. What I like on the weekly chart on the pound dollar is that the 200-day moving average on the weekly chart is at about 161.80. If we can close above 161.80, which keep in mind we're at about 162.50 right now, so probably shouldn't be too difficult. If we can stay above 161.80 through the end of the week, and not that we have to wait till the end of the week, but if we can stay above this through the end of the week, then I think we have a very, very excellent chance of breaking 16300, like a very easy chance of breaking that. But if we do start to get back below 161.80, then we could be looking at some big reversals off of these levels and heading back into this, you know, even as low as, I'm not going to say crazy levels, but we could start heading for this, you know, 158, 157, 100 kind of areas if we can't sustain this above the 200-day moving average level, which once again is about 161.80. So that's just going to be something to keep an eye on there. Again, looking to kind of fill this gap right here and buy, hopefully off some support down in this lower area, but we want to stay above 161.80. Aussie dollar is kind of interesting. The Aussie dollar looks like it should continue up, like it's supposed to continue up, but the charts are kind of telling us something else. We didn't come into contact with any major support here, so to speak. We do have this level that's kind of been running through, which is around 10500, and we pushed a little bit through 10500. We bounced very nicely off the 200-day moving average on the daily chart. You can see the weekly is just a kind of a mess there, but we came off that 200-day moving average on the daily chart. We've come up very nicely. Everything looks very good. But here's what we end up with: a big reversal candle here on the 4-hour chart, and this is kind of telling me that there might be something more to this run. So remember, on these short little runs, I'm not a huge fan of this, and from high to low, we're only talking about 175 pips. But if we can start to get below this 23% moving average, or excuse me, 23% fib, which is right around 104.80, and you can see there's a lot of consolidation, a lot of messy stuff going on right through there. If we can get below that, I think we have a pretty good little run into this 38 and even into the 50%. And that's why I have the 50% fib highlighted, which is around 104.35. I think this could turn out to be a real target, which is, again, the 200-day moving average on the 4-hour chart. Lots of support right here. Lots of reason to believe the market could come back down to that. So that's what I'm looking for. Basically, I'm looking to trade against this 105.23 high. 105.23 is the high of this candle right here. And I want to trade against this. And if we can stay below this, I'm bearish, and above this, I'm bullish. I think we could get a nice little continuation up if we break 105.23. But so far, I think we have a little short-term bearish run into probably 104, into probably 104.50 and maybe even a little bit below. So we have a 50 pip potential run to the lower side here. So let's just keep that in mind and make sure that we're watching for some short-term opportunities to trade down into that support. So that's about all I have for today. I think everything's looking pretty good otherwise. Keep an eye on gold here. We're bouncing off some moving averages. We're doing a couple of things. Gold could be headed a little bit to the lower side here, so let's just keep our eye on that. A little bit of a reversal pattern, but gold could be headed lower, so just keep an eye on that. And I'm not really looking at too many other pairs for today, but we'll have more tomorrow. And remember, we have non-farm payroll this week, so we have lots of activity. Best of luck, guys. I will see you in the chat, and keep an eye on Twitter, DayTradersFX on Twitter. Thanks, everyone.